So to summarize, look, very simple. So this histogram, current dumb money positions. Green bars are the dumb money longies, red bars are the dumb money shorties. Second histogram is basically the historical version, also showing you the dumb money longies and shorties who left the market, but who were in the market at some point. The y-axis shows you at which price levels and how many of the current dumb money longies and shorties are placed. Very important. On the left side, the orange lines below the price are the dumb money longy stops. The yellow lines above the price are the dumb money shorty stops. And the orange lines above the price are just limits, and the yellow lines below the price are just limits. And blue lines are short-term stops, but we'll come to that later. And there are also long-term stops, which are violet, but they're not here in this screenshot. So to summarize, 3 types of stops: short-term, medium-term, long-term. Then the dumb money positions, current and historical, whereby you see on the y-axis at which price levels the current positions are accumulated. Right? And these are also short-term stops, but we ignore them for now, the white gray ones.
Okay.
These are medians. I come to this later. It's also very interesting, but we don't need that for now. This is just a normal Bollinger. It's not really relevant. We come, and I'll show you later as well, of course, the 4-hour charts, for example. Thank you. The 4-hour charts also show you the meter levels. I showed you last time. You remember the net loss and the day chart. Let me see whether I find examples. I'll show you later. So what I want you to do, look, this is my trade collection. I just randomly pick some trades and go through with you. I go through them. So you can understand why I did those trades, what happened in the market, why did the price go where it was. So let's start. I think this one is a good one because it's rather simple. Look, 6th of June, short cable. So this is an hour chart. Look, so price went up, over a few days.
Yes.
Now the price comes down, you see, like around 30 pips. So what the dumb money does is they try to buy the dip. You see loads of longies coming in, the green bars. You see, all of them have the idea, the price came down, I enter cheaply, I buy the dip, and then it goes up again. As often the price does. And obviously what happens is the smart money detects those dumb money buyers and pushes the price against them down. So basically, this is a good example to demonstrate how I trade against the masses, you see? Look, this is good. This actually I documented as well the 4-hour chart, and that's a beautiful example. Really, look at that. You have a cheap entry. Look at those green bars. You see that?
Yeah, quite clear.
These guys, they're all dumb money longies. They're all in the market. Don't get me wrong. They're in the market. They bought at those levels.
Yeah.
So they're banking on a breakout to the upside. You see. So what happens is because of the longies, this acts as a natural resistance. So the price will actually go down, because the smart money will push the price against all these longies down. Otherwise, they would win, you see? If the price would go up from here, these guys would get into profit, you see?
Yeah.
So obviously, they don't allow it. So what happens is, this is an easy short, basically, with the Carney speech and all that. But eventually, the price came down nicely. You see, actually, the dumb money kept on buying. And look, I took profit here, but another trade will show you how it made a pullback and then goes all the way down to the MTS. You see those two here? They will be the target eventually.
So on this sort of trade like that, where would you place your stop, for example, and target?
Yeah, good question. So there are different ways, of course, to manage your trades, right? I mean, what I do normally, for example, I determine at which level I want to hedge. Sometimes I use as well stops, for example, if it's a more risky trade where the bias is not as strong. But what I do in a situation like this, for example, I say, okay, I leave enough room for, let's say, a comment spike or something like that. But that doesn't make my trade any less valid. So what I do is I place a hedge, emergency hedge, with the equivalent, just in case something happens. I don't have unlimited downside. However, remember that when I trade manually these kind of things, I don't place everything in one go. I normally divide into 3 different entries at least. So I would play something. Normally, I get a chance to do another entry at a better price. For example, look, there's a short-term stop here, you see?
Yeah.
there's maybe a 20-30% chance they take that out before they go down. So this is a fantastic level to place another limit. You know, it's already predictable. That's a cool stuff. Look, first of all, you want to play something because it could be they're just going for it because enough long is in the market, right?
Yes.
However, I already can place a short limit here at this good price because if they take this short-term stop, it's even a better setup. Because they cleaned the, you remember I called this pre-run counter principle.
Yes, yes.
So they first clean the other side before going to the target. It's the base case. So for example, this is a fantastic level to place a short limit, a second one. And then, you know, if the price goes there, you get a great entry price, and then, you know, then you have a high chance it just from here it just goes down to the target. You see?
Makes sense.
So I have to explain. So of course, I also show you some scalp trades and so on. But on the manual side, the causality is most powerful on these kind of setups, like on the hour chart. You know, where sometimes it takes 2-3 days, sometimes shorter, sometimes longer. But normally, when those setups present themselves, they're very powerful because, as you can see in this example here, the market is clearly placed. The story is very clear. You know, it's an up move with a dip. So people are trying to buy the dip. As you will see, the dumb money does the same mistake over and over again. You know, mostly it's failed reversals. I picked this example because it's another nice example, but I also show you failed reversal now. I just want to give you a feel for, you know, how I personally manually trade the causality, what I look for. But yeah, so you should always do something to protect your downside, of course, because there can be comments and all that, you know? So in some situations, it makes sense. For example, if you try to buy the real reversal, you should, for example, use a stop, because if it fails, you would just want to get out. You know, it can fail. You have to understand that I distinguish between high confidence trades, medium confidence, and low confidence. High confidence trades have a very, very high win-loss ratio, but they don't come every day, you know? They are free money. I'll show you them as well. For low confidence, I have to also use stops, because if it does like a 50 pip move, maybe I want to leave, you know? I show you those as well. I have some failed trades as well. It's also important to understand them. Okay, I show you this example now, Mohammed, which is also nice to understand. This is April 2019. Dollar yen. That's a good example, this one. Okay, look at that. So we have the situation where the market went flat over a long period, you see?
Yes.
Very flat, consolidating. And look at that. Over time, over a few days, shorties have entered the market. They try to sell down. Now look at that.
Yeah.
In the last 3 hours, we have massive shorties, red bars. Look here on the y-axis, they're below the price, you see? So they are real support, because if the price goes down, these guys get into profit, you understand? So they don't want to let the price come down, because these guys would win.
Yeah.
So they basically, look here, their stops. You see the bright yellow line? This is their empty stop. So this is an easy trade. Look, I can go long, target the stop, trade against those shorties. And maybe I can even try to target, look, the short-term stop here, the big one. You see the turquoise line? Maybe we even want to go to target that. And actually, that's what happened. Look at that.
Wow.
Shorties, they went a bit back and forth. Boom. Look, they went for the big one. Easy trade.
Which time frame is this? Which time frame is this?
This one is an hour chart.
1 hour chart. Okay.
Yeah. So look, I showed you now one where the dumb money wants to buy the dip and it fails, and I showed you one where the dumb money tries to trade a breakout down, but actually breaks up the other way. It's easy to understand, no?
Yes.
I'll show you a bit more complex trade. 19 August short euro dollar. Yeah, but that's a good one to make my point, maybe. Look, this is a 4-hour chart. Look at this, Mohammed. We have a beautiful stop here, you see, from the shorties. Above the price, we have all these longies. Look at that. You see those green bars?
Okay, so these guys have entered long before, like on
here. Yeah,
okay.
Absolutely right. You see the price has been here, so they try to buy the breakouts. You see, from this consolidation long before. So what do they do now? Look, it's simple. This is a simple setup. We have old longies and new longies coming in. You see, and the last stop at the high. So we know that they're gonna take the stop and then go down.
Yeah.
You see?
Yeah.
Easy. I would call this a fake out because look, the dumb money longies think it breaks out. The smart money will actually do the fake out. Look, boom, all the way down. You see? Took the last short term stop. Boom. You see?
Yeah.
Now this is very similar to the other. Yeah. So look at that. So we have this is a 4-hour chart in Kiwi dollar over a long time. Look, it goes down, down, down because the dumb money keeps on buying, buying, buying. You see? Instead of supply and demand. If we were buying, the price would go up, but it's the opposite. So dumb money buys, buys, buys. Smart money puts down, down, down. You see? Now it does the pullback up. And now look, the price went up a lot. We have only longies above the price. You see the green bars?
Yeah.
And now with new longies trying to buy a reversal up as well. So what do?
That's going to drop.
Exactly. So we sell, you know? Green bars trying to buy, so we go short. And as you can see, a very simple trade. Look, you see, it goes all the way back down to the range. So these are easy trades, you know?
Yeah.
It's basically just identifying what the dumb money is doing, looking for good entry, and then going the opposite, really.
Yeah.
You know? Well, let's look something that failed. Well, those are like little trades I do, like nothing special. For example, here, look, the price is in the range, you see?
Yeah.
Now we have this big stop here, and we have some old shorties from here, you see?
Yes.
So I basically just trade back towards the stop, you see, and take out a few pips from this stop run. This is like, it's not high confidence, it's a normal trade you get on a daily basis, I would say.
What's the lowest time frame that you trade?
That was a 15-minute, I think, this
15.
one. Let me see, what was this one? Well, I do, you know, I try, basically, I'm always in front of the markets every day, so I'm trying to look for any trade opportunities, you know. But depending on what I get, I adjust the leverage. So if it's just a trade which is tradable, I don't put in a lot, you know, I just put in a bit and I take some pips. Like here, for example, you see cable, look, some shorties, you see the stops are here. So I buy the dip up against the shorties, you know, but I may only take like maybe 15 pips, you see?
Yeah.
I don't resist to all the move. Let me look for more complex stuff. This one. You see? That's, I think, helpful.
That would be life-saving.
Yeah. Well, of course, look, I could show you something that would be helpful. You know what I could do? I have a presentation which is very, very long. At least I could, you know, so to give you a bit of a structure. Wait, I have to look for it. To give you a bit of a structured overview, like a little course or something, wait.
Is there anything I can do for you, Allah Jama?
No, don't worry, my dear. Nothing to do.
I don't know whether it's testing something or proofreading or moderating or anything that I could do, because you're just bombarding me with your generosity, and I'm speechless.
Don't worry, my dear. Don't worry.
Please don't ever hesitate to ask me. Raja, thank you very much.
Thanks a lot. Yeah, that's the one I wanted to show. Yeah, okay. So that, you know, because there are all those prints, of course, I made also videos, but I'm just showing you a bit of the whole structure so that you're a bit aware of all the different aspects in a bit more structured manner, you know, it's, I think, better.
Yeah.
Otherwise it gets a bit too complicated. presentation and a lot of videos where I explain stuff. But just to give you an overview, look, this, if you want to put in a structure, right?
Yes.
Look, you could say, so one is the dumb money, the bars, no, the red and green bars, the dumb money positions. One is the stop hunting, no, the medium, short-term stops, long-term stops, also option expiries, but they don't matter so much. One is the higher time frames, like H4 and day charts. One is the news, and all the used news, and one is the short-term games, yeah, with the principles. This is basically, in a way, the structure,
yeah,
of the content. Yeah, I don't think I showed that anywhere. So what I have here is I have loads of examples and stuff. So yeah, remember, no, these are the position bars. I call them position bars at the y-axis. Yeah.
Yes.
You see the shorties and the longies. Right. I should explain that. So remember, I call this blocking principle. So if there are position bars in the way of the price, let's say there are shorties below the price or longies above the price. These are, of course, they are blocking the price because the smart money doesn't want to just push the price above them. These guys will win. Look here, longies, you see?
Yeah.
If they push the price above those guys, they're in profit.
Yes.
They could close at a profit. The same shorties. Look, if they would push the price down, these shorties get into profit. So you already know from this picture that here there's a natural support, and here there's some resistance. You see?
Yeah.
Now, obviously, at some point they need to move the price. Otherwise, the price will never move anywhere, right? So there is a dumb money tolerance that at some point they will make a move, and some of them will get a bit into profit. You understand? Without knowing that they're actually on the menu. So that's very important to understand. As a general rule, they want to make sure that those positions do not get into profit. And you remember, I once said a time and range principle. So there's no rush. They can go flat, and they can go exactly between those accumulations of dumb money positions, because if they do a move, they make them rich. So they will at some point make a move to stops and so on. But first, they will use the time and range to a maximum, which is the reason why you sometimes see the market go flat. There's like too many longies above the price, too many shorties below the price.
Yeah.
Right? And in this one video, I have shown 3 different scenarios. And I think that actually these are the examples I used in the video, where in one scenario, they go for the stop run and they let those guys win. And the other one, they turn. I distinguish that. I think the video, it's probably better to watch that, because otherwise, we go through the same thing again. But whenever we analyze markets, it's important to understand that it's very important to see where are the dumb money positions. You see, are they, look, for example, here, you have new shorties coming in and all these shorties below the price, you see?
Yeah.
So like if they can, they will rather, do a stop run. And obviously, look, generally speaking, right, without looking at the meter levels, look, you have green influx, price tends to go down. You have red influx, price tends to go up, right? So that, I call this dumb money flow. So when you have the dumb money keeping on going on one side, the market tends to move the other way, because they basically fuel the opposite of demand and supply. They keep on buying, the smart money sells to them. They sell, the smart money buys and puts the price up against them, you see? This is the main move of the market, plus the stops, of course. So what people don't know is the main aspect of the market structure is dumb money positions, plus dumb money stops, plus a few other things I explain later, like the meter levels. But generally speaking, this is really what this is about,
Yeah.
So whenever the market is in a neutral state, where like there's some longies, some shorties, and it's mixed, it can be that it's not enough for us to trade. Like you have to understand, it's important to always wait like a hunter for those situations where there is clarity, like the trades I showed you at the beginning.
Yeah.
And we know exactly where we want to be. Now, if the market is rangy and there are some longies, some shorties, stops both sides, we don't just put in a trade, you see?
Yeah, no need to risk, yeah.
Then the market, I say then the market is low bias. The bias is low, so we do not just play Rumbo and take chances. Of course you can, but then for example you have to take a stop, use a stop. You cannot just insist on this to work. Now news, I made a video about this as well. Yeah, so basically, look, it's always about this. I made this some time ago. So the importance of the news item plus the expectations plus the actual results plus the previous news, but most importantly, it's of course the money bias. If look here, example, very old example trade. You see, so was pound dollar. We have Carney speaking. Well, look, we have all the longies above the price. You see?
Yeah.
So they just wait for some comment that's in the favor, and they go down to kick those guys out.
Wow.
Yeah. You see? Now, if Carney would have done a bullish comment for the pound, they don't do that because these guys will win. You understand? Always think in terms of what does the dumb money think, what does the smart money think. So they will use economic plausibility only if it's in their favor against the money, not the other way. You see?
Yeah, I've experienced that several times where I was on the right side before the news, and the news came and it went against me. I was
exactly.
And I never understood that until I saw your videos.
Yeah. It's very unfair, and look, in economics I tell you it's like that, and then they bullshit their way out. They say, oh, it was priced in. No, nothing was priced in. It's just that too many shorties, so they already know we need to go up. We don't want to go down. So if the item is against the US dollar, look, in that case where short is going crazy, boom, they just go for the stops again and again and again. You see? And look at that, the shorties keep on selling and they keep on pushing it up until finishing it up. But imagine the same scenario and imagine that the news are good for the dollar. They don't go down because these guys will win, you see?
Yeah.
So in that scenario with a high bias, they are not willing to follow economic plausibility. Yeah, I know. Let me show you a bit of, well, I made a video about this one here. Let me show you a bit, this is important to understand. It's more advanced. So look, normally when you zoom out and you look at the longer term charts, you will see that there are old longies above the price who are all into loss. There are old shorties who are below the price who are all into loss, right? Now, the closer you get to the price, the more you need to understand that, of course, there are short-term stops and there's some dumb money tolerance. Dumb money tolerance means they will do some moves which also allows dumb money to win in the short term. Right? For example, there's an empty stop. They want to take it. There are some longies in the way. Eventually, they will go up, take the empty stop, and some guys will win. This is what people sometimes didn't understand. So that's very important to understand the more you go to the short term. So I made this diagram to explain it. So look, long-term stops accumulate here, long-term stops, long-term positions, and more closer to the price, you have a bit of an overlap and some tolerance. You need to, so the more short-term you go, the more you need to understand the tolerance. And this is maybe a good example. Look, this is very old, but anyways, the principle is the same. They do a move against the longies, but the stops are far away. There are loads of shorties in the way, you see? So now I show you the dance they do between the positions and the stops. So what do? They go back up, right, to price in all the shorties. Remember time and range principle, cleaning the counter side, normalizing the price. However, as you can see, longies enter the market trying to buy it again.
Yeah, they pull in buyers.
Exactly. So if they go too high, these guys win. You see? And so now what do? They go flat, at least for a few hours, because look, if they do any move, one of the two will win too much. So why should they do it? They have all time in the world. And then eventually, look, shorties leave the market. They did it as long as they could, and then they do a move towards the bottom part. Now, this is a good example also for, sorry, it's in German, but also what George showed you. George is very focused on, I showed you before, on this kind of setup. So you have the price, you have accumulations of stops, and now you observe how the price does a stop run, takes out all these stops.
Yeah.
Of those highs. And he calls it herd mentality. I call this a fake resistance because it's a resistance which eventually gets broken. And then the price exhausts. This is basically George's main setup to short. So it's actually a post stop run setup.
Yeah.
So after the stops have been cleaned, then he looks to trade a reversal back into the range. Obviously, that can be, maybe it goes all the way down, you know, or maybe just a few pips.
Yeah.
And these kind of games, look, I call this a grail pattern. So you have the price which looks like a grail, you see?
Yes.
And whenever you have this situation, you tend to have inner range stop accumulations, especially in the short term. They like to clean it, you see? And take out short term stops. So in that scenario here, we have a grail scenario. So look, we have shorties in the way. So why should they not, you know, go up and clean it once more? You know, there's too many shorties in the way. So that's exactly what they do. And that's basically whenever you look at any market in the short term, any price chart you look at, it's always some output in that context. It's always about positions versus stops. Always. Now, sometimes it's easy to see for us. Sometimes it's also complex. And, you know, like there are some stops, some positions, and it changes a lot. But normally, you know, eventually the bias will become clear at some point, you see? So what you will also see from the videos, when I analyze the markets, I, for example, look at higher time frames, I define the general story. Then I say, okay, those are the lower time frames. At those kind of prices, I would like to buy. At those kind of prices, I would like to sell. Base case is this. Whenever I say base case, it means what normally happens. You see? So those trades I've showed you before, they are all related to the same stuff, really. You know, it's all about the same thing. And of course, you know, when you do live analysis, there are these different factors coming into play which you should take into account, such as time range principle, tolerance principle. Is it worth it for the smart money to make a big move? What news are coming? How far are they away? You see, like all these factors play a role. And maybe that I once made this. Maybe that's a good overview, like from the perspective of the smart money. Most of the time, the price is some kind of short-term stop position bar context. So there are some dumb money positions, and they want to take short-term stops. Then we have situations where the market is in news mode. So where some news are coming up and they need to make a decision. Do we go first in that direction or do we wait for the news? You see? Often you see the price doing a move before the news, which is never coincidence. You know that it's, for example, because the dumb money is long, they want to already go down. And then if the news confirmed, they do a big jump. You see? But of course, we also have low bias situations where the market is just flat and whipsaw. Yeah, where there are some positions, some stops, and it's not going anywhere. Then that's what we love, really. There are situations where dumb money positions are building up, and we can predict that there will be a big dumb money killing. They will go for a big move in one direction. That's 15% of the time, so it's not every day, unfortunately, but that can even be free money. These are the ones where you can make good money easily, you know, easy trades. Of course, there are also modes where the high time frames take over, which is very important to understand. In fact, let me show you. Let me show you on the latest charts, the day charts. That's something I should explain. Yeah, maybe that's a good idea to explain. Because, look, especially when you look at day charts, the moving averages, they tend to show you very well where there are significant stops. So sometimes you see the market doing a big move towards those moving averages, not because they are significant in any way, but because dumb money tends to place the stops at those moving averages. You understand?
Yes. Yes.
And yeah, that's well. Let me show you. Yeah, here for example.
Self-fulfilling, basically.
Let me show you the day chart of Kiwi, for example. Here. Yeah, that's a good example here. The day chart of Kiwi. That's why I have those moving averages on there. Look at that. The only reason why I have them on there is not because, you know, like they show momentum or any crap like that. The only reason is that they love to take out the moving averages whenever they can. Now, it doesn't happen every day, obviously, but every few weeks. For example, look, the price is here. You see, and they have all the moving averages below. So what does the dumb money do? Look, they are long. You see, dumb money is long trying to buy the dip again. And of course, where do they place the stops? Below the moving averages.
Yeah.
And look what the smart money does. Look.
Yeah.
You see? The 50-day, the 100-day, the 200-day, boom. They take them all out and look over 2 weeks. You see? And once they've done that, look what they do, retracement. You see? That money keeps on buying, so they do the same mistake again. And what do? They do a counter move, pin, boom. Stops of the guys who are placed correctly, the shorties, kicked out, and boom, they go for the next big dumb money stop run. Look.
Oof.
Cleaning all the moving averages again, you see?
Yeah.
This is very important to pay attention to. Even if you trade in the short term, there can be situations where they are close to a moving average and they prioritize cleaning the stops at the moving average over anything else. You see? So that's, for example, now look, it was easy for me to predict that the Kiwi would come down because look at this, Mohammed. Shorties to longies. So dumb money switch from short to long. Moving averages below the price. So that's why I did a short here. Because look, price is overbought. Too many shorties. Shorties switch to longies. They say, you know what? We tried to short it. It went all the way up. So let's buy it then. Dumb money switch. Very important. Dumb money switch. And so what do? They say, you know what? Okay, then we take the stops at the moving averages. You see?
So we can tell that the switch happened because in the second set of in the second indicator, there's little shorts left. Is that correct?
Well, so look, let me show you precisely that one because it's a good example. Look, you have shorties coming in.
Yeah.
Look, they do this massive. What how many pips are these? They are 230 pips. They do a 230 pip move. No, sorry, much more. Because they're down here. 300 pip move against those guys, you see? Shorties, 300 pip move against them. And as you can see, most of them are kicked out. They're not in the market anymore.
Yeah.
They're killed.
And longs are coming in.
So the dumb money overall switches from short to long. And what do? Boom.
Wow.
You see?
Yeah, it's a very clear example. What's the meter level on this?
Sorry?
What's the meter level on this one?
Yeah, that's a good question. Let me show you that because that's the most powerful thing. Look at that. Look at that.
The right slightly.
This is the most powerful stuff. Look at that. Shorty's getting into profit, you see? So what do?
Spike.
Boom.
Wow.
Boom. And look overall, you know, look this up move.
Yeah.
It still echoes from this. Look.
Wow.
And look at here. Look at that. Short is the profit. Boom.
Wow.
Short is the profit. Whenever look, boom. This is a trading strategy on its own, Mohammed. You could only trade that and make a fortune. You know what I mean?
Yeah.
You could only trade. Obviously, look, there are periods where they don't come, but look at that.
Yeah.
Boom. That's the biggest secret, if you ask me. Boom.
Wow.
Look at that.
These guys are ruthless.
There you are. Look at that. Look at that. Boom. Look at that. Boom. 1, 2, 3, 4, 5. Look at this one. Look at this one.
Yeah, that little bit.
Yeah. Now, obviously, look for this period, and we're talking like weeks. There was nothing. You see. Then at some point we get one again. And I should also say that there can be situations, which is a bit more advanced, where there is a net. They first need to finish off the last stop, so they go more in that direction before. But then the spike will be more pronounced, you know. So it's okay if you place early, it's not the end of the world. Understand? But whenever you see it's going to come, this is the most powerful setup, and this is a meter level.
Wow.
This is super powerful. But then again, look, I mean, look, this is if the Damani keeps on buying and the price just goes down, it's also easy, you know? There can be easy setups. The best thing is to just concentrate on easy stuff, Muhammad. You know, obviously I try to sometimes trade funky stuff, you know what I mean? But that's not supposed to mean that this is a way to go, you know? Like I do this for a long time and I have the confidence to, and also the preparation to take trades which are not so high bias, you see. But I may be wrong on those, but I have my plan in place what I do then, you know. It's not that I put in lots of positions and I then get in a massive drawdown or whatever, you know. It's like I work my way around it. But it happens from time to time. When I do more freestyle stuff, I may get caught in a position and I either need to close it or needs to, you know, do something about it. You know, it happens because I basically try to have a rather high trade frequency, you know. But it's essential that I put in more for the high confidence and less for the low confidence. Otherwise, I mess up my performance, you know. So when I did those live trade videos, I basically documented most of the time, not always, but I documented medium to high confidence. Maybe here and there I did a low confidence as well, but first of all, I didn't want to do videos every single day, you know. But whenever I saw a good setup, I said, "Oh, why not make a video?" You know.
Well done. Well done.
And that was a good way also, you know, to show. But look, Mohammed, this is my style, but there are many other styles. Maybe you develop your own style. Maybe maybe you find something you know, your own thing, your own setup, which works for you. Like I always stress that point. People didn't understand it. Look, all you see here, this is how this is a market structure. Nobody can change that, you know?
Yeah.
But how you trade it, look, there are unlimited ways of trading stuff.
Yeah.
Whether you do it manually or automated, or whether you limit yourself to setups, or whether you only do high confidence or medium confidence. Look, bro, there are many ways of playing the game. I never, you know, I showed my way, but this is not the only way, you know?
Yeah, of course.
That's what I'm saying. It's important to get a bit of a feel for things, to observe it, to learn and to analyze, and to maybe, you know, experiment or demo and so on. And then maybe you see one thing and you make it your own. You say, look, I'm trading, I don't know, failed pullbacks in that and that scenario, you know? So be very open-minded. I'm not trying to impose anything. There are many ways of playing the game. You know, you could even do long-term, you know, some people that would just try to ride trends like that against, you know, flow. It works, but then, you know, you can't overtrade every day, you know, you must hold over some positions, you know what I mean?
Yeah.
But I have to say also, when in the process of learning that by myself, I also did the mistake of over trading. You know, I was going to 5-minute charts, 1-minute charts, and then to approach it. You know, you have to give it a bit more time. Like it doesn't make sense to over trade the causality.
Now the smallest time frame you go down to is 15.
Yeah, so look, I learned that you can do pretty well with hour charts. I always look at 4-hour charts, 1-hour charts. And one should always also check the day charts. Even if it's for a short-term trade, you should still check the higher time frames. It's very important because, that's maybe one thing I should explain, and maybe that's enough for today. Inner range versus outer range. That's a very, very important thing to understand. Let me show you. Look, this is a good example. Look, it's kind of intuitive, Mohammed. If the price went down so much over weeks, like here, yeah?
Yeah.
Like 500 pips. Look, the more it goes in the same direction, even if the dumb money keeps on buying, yeah? Apart from the, ignore this for a second. Obviously, the more it went down, the more stops it took from the longies, the more risky the thing becomes, and the higher the likelihood that the thing snaps. Now, this is what I call out of the range scenario, because look, the price broke so much out of the range. Look, the range was up here. That's very important to understand. Let me show you why. Look, the price is in a clear range here, right? Now it did massive stop runs against the longies. It took out the stops. Now did another move. Now, obviously, this won't go on forever, yeah?
Yes.
Even if the dumb money keeps on buying, at some point they need to normalize.
Yeah.
Now, and this is the one of the few situations where one needs to really be careful and look at the higher time frames. Of course, if you ignore all this information, you only see longies, you may insist on another trend presumption. And that can make you a losing trade. You see only green bars, you say, well, the dumb money is buying, so I enter cheaply and I go towards the lows. You could do for bloody 8 weeks.
Yeah.
Now, obviously, nothing lasts forever. So here, the dumb money tolerance is very high. They don't care. They do put the price up there. Let those longies win, because let's be fair, those longies waited a lot and went cheaply into the market. You understand? They are one of the last jumping on the train. They are not those guys who try to trade an early reversal. So these guys are basically smart dumb money, so to speak, you know?
Yeah.
So, but you have to be super careful, because look, okay, that scenario, eventually the price retested the low. But there can be scenarios in other markets where it never comes back. And there you can get stuck. I once got stuck when I didn't fully understand that point. I once got stuck in a nasty pound yen move like that. And then, it came back like, after some time. But this is a situation where where even if you try to do a short-term scalp, whatever, you have to be aware what's going on the higher time frames. Because basically you are insisting on a move which has been there for weeks. You understand?
Yeah, that's very.
So always use common sense within the analysis. It's not that difficult. With experience, you will check. So, okay, the smart money thinks this, the dumb money thinks this. They're very repetitive patterns. Look, this is a standard failed reversal. Look, price goes up. Dumb money wants to short.
Yeah.
They say, I do a cheap short. And boom, failed reversal. Again, failed reversal. Failed reversal. Failed reversal.
Yeah.
Look how often that happens. Always the same. Dumb money thinks I short now. Smart money pushes the price further up. Look at that. However, the more this has happened already, at some point the price will turn, you see? Of course, with some dumb money switch here, but you can do that. But the more you did it, be aware that the tolerance increases, and at some point markets will normalize. And for that, you have to look at the higher time frames. Otherwise, because what happens is, look, you trade all these trades, you feel very confident, you put in high leverage, and you maybe you have white hedge or white stop, and then suddenly you get stuck.
Yeah, I see.
But there are not many situations like that. That's one of the few where you really have to be on top of things. But
yeah, it makes perfect sense. What about like weekend gaps and things like that?
Okay, that's a good question. And that's also very dangerous. You have to be very, very careful. I have it here somewhere. 1 second. Yeah.
This is a huge presentation. How many pages is this?
It's like 1,000 slides.
Wow.
Look, I have to say, many guys, they know that some kind of manipulation is going on, and that's enough for them. They know that there's manipulation. They don't want to know the details, how it works, But yeah, your question is very important. Gapping. Look at that, Mohammed. As a general rule, the market will never gap in favor of the money. Never.
Wow.
So I'm pretty good with predicting gaps. So because normally if there are some shorties, some longies, it won't just gap. However, it will gap against that money. You see?
So if there's a cluster of longs, for example, it will gap down.
Yes. Look at that. Full of shorties. Look at that. Boom.
My God.
They use the chance, the nasty guys, to just take all these guys out in one go.
So ruthless, man. Even the weekend, they don't let them breathe. Wow.
And that's a very important topic when it comes also to EAs and all that. No, like you have to have something in place for gaps. They can mess you up because remember, even if you have stops or hedges, you don't get filled. You know.
Yeah, indeed.
You get a shitty price, so your downside is unlimited in theory.
Except one time with my dodgy broker, where I had a huge position. I was shorting, I think, Euro USD, and I was on the right side of the market.
Yeah.
It gapped past my take profit. So when the market opened, it opened like 40 pips past where I had placed my take profit.
Yeah.
What did they do? They closed me at the place where my take profit was.
Yeah.
And they gave me only that bit of profit.
Oh,
I was like, how the hell did you do that? This is like the market was not open. How did you execute me at my take profit? You know, if this was a stop loss, we know you would have closed me out at the market open. How did you? It was just crazy. These, yeah.
It's so nasty, isn't it?
Yeah, yeah.
It's crazy. I know, I know. Do it like nicely like this, you know. Let me see.
PT, this is absolute gold mine here. I'm surprised.
Yeah, it's not many years of work, Mohammed. Years of work.
Yeah.
Put like 7 years into this at least.
Wow. Well, it's gonna pay off. I think it's paying you off, and it will continue.
Yeah, let's see, Mohammed. I'm waiting at the moment for a few things to close. That would be fantastic, you know. I'm actually waiting for things to happen. Let's see what happens. Whether this is an old example, but from 2017. But anyways, I mean, you see the market went gapped up, and then filled the gap. Yeah, that's a good one. Well, let me show you this is older, so it looks a bit weird because as you can see, I make things nicer. This is also a bit more rough, you see? But it's the same information, I just not so nicely visually presented. But look at that. You see the euro dollar gap up to the high, took out the short-term stops. Now we have all old longies, so they don't want to make these guys rich. They go exactly down to a gap reversal.
Oh.
You see?
Same games.
Yeah, same games. So I traded this one. Often they even do a 50% reversal. However, you can see that shorties entered as well. You see?
Yeah.
So when you see that, it's not so nice anymore. So I just go out, you know, take what I got because guys are coming on the right side. You see? I used to do nicely documented. I don't do so much anymore, to be honest. I only do like screenshots, but I used to write like a journey, you know, like, oh, these news are coming, blah, blah, blah.
Yeah.
But to be honest,
that's I mean that's a lot of time and effort you put in there. It's just I'm shocked that not many
yeah,
people...
that's what you need, Mohammed, for this game because it's so complex, you know. When you remember, I always said in the project, guys, put in the hours, you know, I was serious, you know. I never showed these things, you know, but I think I mentioned, you know, how much time I invested into this because the only way to understand all that was to basically document and live test, you see? I had no other chance. Look at that. This is, by the way, long-term stuff. You see the violet?
Yeah, the violet.
So that's a nice example. But don't forget, Muhammad, when you see the medium-term stops, most of the time they do pre-run counter. Even if they come close to the stop, 10 pips before, rather than taking it, they go the other way again. And then they do it, you know? That's very important. You will see it also in the videos. Very important to always be aware what the base case is. You know, that normally they do some games before they go for the stop run, you know? Because they have no rush. You had the dumb money on the long side dominating. So you had loads of longies and not so many shorties.
Yeah.
Which means, like, overall, of course, they do the counter moves again. Look, whenever there's a dumb money switch, you see, from long to short,
Yeah.
The counter move, and of course. However, that being said, on top of that, you can see that overall this downtrend with the several trend resumptions down, 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 down is also a result of the fact that overall in the market we had more longies, old ones, and those new ones are more important. So the market so the smart money is sensitive to this money flow. When you look at the chart now overall, you can actually completely understand each part. You can completely understand why. You look, nothing is random, nothing is related to supply and demand. Everything makes complete sense in this killer machine. Now, what happens overall in the market, and you can see it better now, of course. Look, from longy overall, it changes to shorty. And guess what? Look at this.
And go up.
You see? So now, look, now we are literally in a phase right now where, look, we have longies which got served in the last days. You see?
Yeah.
The reason why euro dollar came down so much was all those longies. However, look, we already know, and that's important for next week. Similar longies, shorties. Shorties. The reason why they snap up is because the dumb money tolerance was high. It was out of the range. Shorties, some shorties coming in, so they needed to snap, take the inner range stops, and I actually posted the. And I actually traded the move up to the empty. You can see it on the forum. So, but this is complex because as you can see, I traded here in the dumb money tolerance. Overall, the dumb money was long still. Look, there's even empty, so they can do a trend resumption easy. You see?
Yeah.
So I traded the counter move and took some pips there, but I don't want to be too long. I don't want to buy it because overall we still have longies and without problem they could look. They took this target now.
Makes perfect sense now.
Pay attention to the upper inner range stops here. Those two, you see? That gray pattern.
Yeah.
So, you know, this would be gray pattern. This would be, of course, suddenly we have massive shorties entering the market.
Yeah.
What would happen? Line goes above the green line. What? And then we know already that they will take the gray stops. Yeah. So this will be pretty interesting in euro dollar. Yeah. We will either get some kind of inner range gray. It's likely that we get a trade in euro dollar next week.
Amazing analysis.
Thanks.
But this is very nice. I mean, Jamal, you're being abundantly generous with me. You're literally saving someone's life here. Not my. I don't know what to say. I'm speechless. Thank you so much for all of this and for your time. And I mean, just this recording now is like.
Oh my God! Let's stop. Otherwise, I get problems with my bell. Okay, Mohammed, great stuff. I mean, that was a lot of content.
Thank you very much. That was indeed. I think I'll go back through the recording at least another 1 time or 2 times or 3 times.
Sure. Cut it together and put it on so other people can learn a bit from that and whatever. We could do that. But
yeah, good idea as well.
See, people can learn. It's no problem. Can do that.
Thank you very much. Thank you very much, Jamal.
Okay, idea. Well done. That was a lot of stuff. No, I'm tired now.
I'm really blessed. I'm so happy that I sent you that email. Wow. I'm speechless. Thank you so much.
No worries, brother. No worries. You know, look at it, observe it, make notes, demo trade. You know, give it a bit of time. I've learned. You know, you need to get into it. It's a bit. You know, it can be a bit confusing, especially if markets are low bias. But now you have a better idea what I'm waiting or looking for, and these things they come eventually. You know, so. And in the videos, normally I say this would be a medium setup, this would be a low bias setup, this would be a high bias setup. You know, normally I comment on these things. So you know what I mean? I would suggest to take it from there.
You have Have a great evening and have a great weekend, Jamal. I really appreciate your time. Thank you very much. Have a good evening.
Take care, Mohammed.
Hafiz. Bye-bye.
Bye.